Hello. Thanks for watching this video. If you are a new visitor to my channel, note this video is part of a series of videos, and please see the earlier videos in this series. They build on the knowledge in the prior video, and it is essential to understand the flow of thought to make complete sense of this video. When you observe the charts, one of the most important things you will notice is the pullback that occurs in the trends. Let us look at the pullbacks in a simple trend and pay close attention to the bars. Here you can see the individual bars sometimes continue the earlier action, but mostly as seen in this area, every bar shows some price action beyond the level of the previous day's close. These are the pullbacks in a short time. As we know very well, markets do not move in a straight line all the time. Assuming this to be a daily time frame, every subsequent day, markets pull back to test approximately the midpoint of the range of the previous bar and then continue in the direction. Many traders get extremely agitated when the markets do not move in their forecasted direction, and even after understanding the markets do not move in a straight line, feel frustrated and anxious when markets show these intraday pullbacks. We can also see that sometimes markets break below or above the previous bar's low or high, but if the trend must continue, they do not break the low or high of the previous two bars. Thus, if you are trading a simple trend, keeping a stop loss below or above the last two bars low or high will keep you in the trend most of the time. A simple rule would be, markets can break one, but not two. Let us now look at the swing trends. Here too you will observe that if the trend must continue, markets will break one swing, but rarely two. Breaking below or above two previous swing low or high warns us that the trend is most likely to reverse. If you are trading swings, then it would be prudent to keep your stop two swings back. See the swing trend here. And note, every time it may break one earlier swing, but never two. If it breaks more than two swings, then indeed the trend continues in the other direction, and we can safely assume that the trend is changed, until the next time it breaks two swings in the other direction. Study many charts on your own and you will see the advantage of this rule we formulate. Markets can break one, but not two. In the next few videos, we will see how to trend the market, to understand the swings better and how to catch the highs and lows not only in a trending market, but also to catch the highs and the lows in a corrective sideways market.